You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, natural resource specialist at the Oxford Club. His website is investmentu.com. Welcome to the show, Sean.
Thanks for having me on.
Gold apparently is breaking out.
Yes, right now it is going to test the overhead resistance that it did in early February. It's actually higher than what it closed at in early February, so it all depends on what kind of chart you use, right? That's the whole thing with technical analysis, is no one can agree on what the standards are. But it's at 1258 as you and I speak, and if it does break out here, and of course things are still iffy, I see that running up to around 13, hang on a second, let me look at my little chart here, and I'll give you my exactamundo forecast, 1386. And so, because this is a well-known pattern, what it has formed, and so it is now considered halfway up the flagpole, because flags and pennants fly at half mast, so it's halfway up. So it should run up to 1386, which is quite a good move. And everyone is, of course, looking at 1300 as overhead resistance, and it still could be. But if we start to charge toward 1300, then you'll see a lot of people who are currently bearish, and I'm thinking of a lot of big banks that we know are bearish, will probably have to cover. And if they do, that could really provide the tailwind for the next move. So 1300 might not be so much of a way stop as just a road sign. We'll just have to see how that goes. But so far today, things look pretty good. It's looked pretty good for gold on a weekly basis and on a monthly basis. And this is where it starts to get interesting. On a monthly basis, if anyone wants to call up a chart of gold and move it to a monthly chart, right? And then put a 20-period moving average on it. This is the first time that the excuse me, not gold. I was speaking about the GDX, which is the big gold mining ETF. This is the first time on a monthly chart that the GDX will be closed over it's like a 20-period moving average on a monthly basis since 2011. So when we saw gold get crushed more than 30% over that 4.5-year bear market, the miners got crushed down about 80%. I mean, going by the GDX, of course, we can think of some miners that went to oblivion and some that held up a little better, but that was the average. Now, they've all come up well from that. I mean, the rally in gold in the first 2 months of the year was extremely good, and the rally in miners was actually much better. GDX was up about 57%. But compared to the just crushing they had for 4.5 years, there's a tremendous amount of room to make up. And if the price of gold really starts to move, then the gold miners should really start to blast off. Now, there's a lot of ifs in that sentence. You know, nothing is guaranteed. But I think if people aren't looking at gold miners yet, they should really start to make a buy list of things they want to pick up on the next pullback, because we're really looking at some tremendous action, both fundamentally and also on the charts. And so those two together could be quite good.
Now, today we just received word the Canadian government has sold off the very last of its gold reserves. Was that a good move?
No. I mean, is there anyone in your listening audience who thinks it was a good move? I guess, what are they doing? Maybe they're considering the gold in the ground that all the miners hold. Maybe they're considering that as like part of the reserve. I don't really know how their logic works at this point. I think every government needs to own some gold, and the world's major central banks are purchasing a lot more gold. They accounted for 14% of all gold purchases last year. I mean, they've had 8 years in a row of like purchasing gold, more gold than they sell. And so they're really starting to buy a lot of it, probably for a couple of reasons. One is to support their own currencies, just against general chaos, but also because they want to diversify out of the U.S. dollar, because that's the other big holding they have as a reserve currency. And yet the U.S. dollar is not really showing much impact of this. You would think with all that selling of dollars going on, which must be happening because we know that the other central banks are actually diversifying out of it, you would think that the U.S. dollar would be plunging. That's not happening. It's actually quite strong, and that's because of something else. I don't know how deep you want to get into this, but negative interest rates. That's actually that's a new force we have on the market, but it has such potential for impact that people can't ignore it. I know when you normally talk about interest rates, people either fall asleep or else tune out, but they shouldn't. They should pay attention to what's going on with the interest rates in Europe, in Japan, in other parts of the world. 1/3 of the debt being issued by governments in Europe right now is at negative interest rates. That means that the government makes money on the debt that it issues. That's completely the opposite the way that it's supposed to work. In Japan, it's so bad that the Japanese government, since it instituted negative interest rates back in October of 2015, they've made $484 million just by issuing debt. That's not how it's supposed to work. But what that means to any person in that country is if you have $1 million in the bank and say the negative interest rate is minus 2%, I'm just kind of pulling that out of the air, but that's what it is in like Japan right now. Well, that means at the end of the year, even if you don't touch that money, you're going to lose $20,000. So that's the kind of thing that's supporting the U.S. dollar now, because we still have interest rates. And the U.S. Fed, despite some news that might make them change their mind, is still talking about raising our interest rates multiple times this year. And so that's what's really supporting the U.S. dollar right now. We may be seeing central banks move out of it, but investors are moving into the U.S. dollar. And so now we have this weird thing going on where it seems like gold is moving independently of the U.S. dollar right now. It's a strange time to be in the markets. And it's not just weird things going on with gold. There's a lot of weird stuff going on in the markets. And so in times of stress, this kind of stresses out investors because there's all sorts of stress in the markets. We could speak about corporate debt. We could speak about the debts by various governments. We could speak about the huge migrant crisis that they have over in Europe, which seems to be getting worse, not better. And these things are stresses on the market. And so when people get stressed out, they look for a harbor of safety. And I think that has to be one of the things pushing gold higher right now, is people are really worried about what might happen in Europe, certainly what's happening in China, and that's why we're seeing movement into gold and the U.S. dollar.
Well, in Japan, the reaction to negative interest rates has been people rushing out to buy home safes, and apparently they've sold out. They'd rather hoard their cash at home than leave it in a bank where it loses money.
Right, and that's exactly what the central bank did not want to happen. They thought by going to negative interest rates, people would stop hoarding money, which they had in the bank, and spend it. But that's not happening, and this is one of the problems with a top-down command just action by a central bank is unintended consequences, right? They really thought what they did would make something else happen because they think A plus B equals C. They have a logical line, and certainly they aren't morons and they aren't crazy. That makes good sense. But people are emotional. They're emotional. They always don't do the most logical thing, and they're scared. And because they're scared, they will do things that the central bank is not planning on. And that adds more uncertainty to the market, which makes things even more crazy.
Well, the U.S. government in its war against cash wants to eliminate the $100 bill. Canada, in its war on money, eliminated the penny. Why the difference in policy?
I think that the U.S. should eliminate the penny. It's a stupid thing to have right now. I don't think they should eliminate the $100 bill. That's stupid. I mean, seriously. how can you actually get rid of a unit of cash that's used by people? I just traveled overseas. I had hundreds in my wallet. You need them because things cost money and they're more expensive all the time. You can't just get rid of cash. You can't have everything going to banks. I mean, there are certain things you buy where really cash is the best thing to have. Cash can get you a discount. Everyone knows there's a cash discount for things. You don't want everything to be in the bank. There are great restaurants, by the way, down here in Florida that say cash only. They don't want to deal with credit cards, the hassles. They get just raked over by Amex and any other credit card company you care to name. They say, no, we're sick of all that stuff. We only want cash. Well, if I take my friends out to breakfast and you get rid of the $100 bill, what the heck am I supposed to do? That just does not make any sense. And but, you know, I mean, I'm sure that the fat cats in like Washington, D.C., they don't even think about these things. They're only eating at the 5-star restaurants, and they aren't even picking up the bill. So they aren't actually worried about that kind of thing. But they should really worry about the real problems that real people have. And so getting rid of something like the $100 bill would be one of the most stupid decisions we've seen come out of Washington, D.C. in quite some time, and that's saying something.
We'll have more with Sean Brodrick right after the break.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. Bird Dog and the Vintage Electric Band coming to Fort Langley, Mission, White Rock, West Vancouver. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Sean Brodrick. Sean, what do you anticipate for the price of crude?
Well, crude is in a very interesting place right now. Certainly doing better than I thought it would be. One reason is that we've seen U.S. crude production fall. It's now at its lowest level since November 4th. And so that's the bullish side. On the bearish side, inventories continue to build. One thing we're doing is we're importing more oil, and certainly Canada's producing plenty of it. So I think that part of the rise in oil has to be artificial. It was either algorithms or just people trading, hard to say. But there seems to be a certain problem crude oil has closing over 35. If it closes over 35 on a weekly basis, things are going to look more optimistic for crude. Then it can run up to 40 rather quickly. But otherwise, we could see things roll over simply because even though we aren't producing as much crude as we used to be, inventories are still way high, especially in places like Europe and stuff like that. And so we could see the price of crude nose back over again. That said, you know, we have some oil companies recommended, and they've had a great 2 months. You know, January and February were very good for them. And so this can be a time when you can find bargains, and when things pull back, you can buy those pullbacks. I think you can do pretty darn well. And there are certainly companies that can thrive in this environment. I know that the ones that have bad news grab all the headlines, but there's plenty of companies that have good news out there too. So you just have to focus on those, and I think you can do very well, especially if they've been beaten down for no good reason other than they happen to be hanging out in the same group with the companies that had bad news.
Nigeria says the oil-producing countries will meet March 20th to discuss capping production. And, of course, Saudi Arabia and Russia have already said, we'll cap our production at January levels. Well, of course, those were both record levels. So how much of a cap is that really?
Right. With the whole cap or even things like cutting, which I know some countries have like proposed, it's always a you first kind of thing. You go first, you cap. You go first, you cut. So I think I wouldn't expect much out of them. But that said, I think global growth could be doing better than many people think it is, and that could be an indicator that we'll see more oil used. And really, I think that if we're looking for a salvation for this oil market, it isn't on the supply side with a real cap in production. I think that we could see more demand. And the reason I think that the global economy is doing better is because the action we've seen in copper recently. If anyone wants to call up a chart of copper, they can see that it is breaking the neckline of an inverse head and shoulders pattern. And I don't want people's eyeballs to glaze over. But what I'm saying is a chart looks bullish. A chart actually looks bullish. Copper has moved higher on good volume. And this is a market that was supposed to be dead all year because of what's going on in China. And so apparently there is some demand for copper out there. And so that makes me think that the global economy is not nearly as bad as we thought it was. Maybe things are starting to improve there, and so we could really start to see more demand for copper. If we need more demand for copper, you can bet that we'll need more demand for oil. So I think that's where the market salvation would be on the side of demand, not supply.
Well, I've heard that the copper chart is actually a very good indicator of the world's economic health.
Right. That's why I was referring to it. Yeah, this is the crazy thing. I mean, sometimes when we say these things, people think we're nuts. But it is called a Dr. Copper because it takes the temperature of the global economy. And it sounds like you're saying some kind of nursery rhyme, but no, that's what we call it. We call it Dr. Copper because copper is such a useful metal. It's used in everything, right? And so that's why it takes the temperature of the global economy. It's used in so many things that the price of copper kind of indicates how economic activity is actually going on around the world. And what it's indicating now is that things have bottomed. And so that, I think, is where people in the oil market should look for hope because at least copper is saying things are looking good, and the move in copper since January has been very exciting.
And they're also expecting the driving season to start early this year because we've had such a mild winter, especially in the West Coast, but I guess central U.S. also very warm for most of the winter.
Right, yeah, and we'll have to see if that boosts natural gas demand because of, everyone cranking on their, AC units and stuff. There's still hope for that market as well, though. Frankly, we seem to be producing so much natural gas that I hate to be trying to pick a bottom here because, it could be tough to do at this point. I mean, looking at it just recently, natural gas broke the low that it set back in December of last year, and everyone thought that was the ultimate low. Well, it just broke that low. So how are you really going to pick up a bottom in that market? Inventories are sky high. But again, if the heat index cranks up this summer and people crank up their AC because of it, that'll mean more electrical demand, which then should mean natural gas use goes higher. Hey, since we're speaking about that, you want to know one other reason why electrical demand is also going to go higher?
Yes.
Marijuana. We've actually been noticing this in the data out of places like Colorado and stuff like that. All the growers there, right? Apparently, growing marijuana 24 hours a day is a very energy-intensive operation. And as marijuana legalization and the relaxation of laws spreads around the country, right, more and more people are doing that, which means they are using juice at a fantastic rate. And so in Colorado, they can actually measure how much marijuana is being grown because the amount of electricity being used is just going up and up and up. And so I'm not saying that will solve the natural gas problem, but it is an interesting fluctuation in the market because we have economic activity from something new that's being added to the market, and so it is kind of one more thing you have to keep in the mix.
Well, in BC, of course, the government here says they want to be able to sell legal marijuana out of the liquor stores, which the province owns, or most of the liquor stores. There are private ones. And also, I've heard studies that say the Canadian government, once pot is legalized, will make $5 billion a year from it. But if the utilities owned by the government are also making more money, isn't this not one way to fight the government's deficit?
Yeah, well, maybe that's one way to do it. Down here in the U.S., our deficit seems to be unsolvable at this point. Neither of the leading candidates for either party seems to be willing to actually handle it. And in fact, things like military spending, which is just out of hand, just keeps going through the roof. We are spending $1.5 trillion on a new jet fighter that isn't as good as the old ones, and so that just gives you just an inkling of how the U.S. government is spending its money. So things look, well, I certainly wish your country all the best luck with its debt and its finances. Please wish us some, because we're heading into the most interesting election that I've seen in my lifetime, and it's really hard to pick out which one is going to be the better result for the American people.
Well, why is the U.S. military budget climbing? Well, for example, they're paying $900 for optically guided kinetic connecting devices. You might know it better as a hammer.
Yeah, well, that is one thing that I mean, we've always had government waste, but the amount of money they're spending on the flying turkey, the F-35, is just insane. And it's being built even though some of its systems aren't actually designed yet. And it was supposed to originally have 2 engines, but that made it too expensive, so they knocked it down to 1 engine, and now it can't perform. I mean, yeah, the things like the hammers always get everyone really excited, but you have to look at some of these major weapon systems, because I'm not sure who we're going to fight with the F-35 anyway. It's too expensive to risk in battle. So don't get me started on like government waste, because it isn't just the military. There's government waste up and down all over the place. It just drives me bananas. So I think we should move away from that area of attack and back to things like gold. I mean, really, this is a time when people should be looking at what's going on there. I know people were out of gold for a long time. I don't blame them. A 4.5-year bear market, I mean, you definitely want to stay out of it. But things seem to be turning. And I know commodities generally were just hammered so far down because of concerns over China and stuff like that. But that just makes things super cheap. And if things are turning around for select commodities, I'm not saying all, but for select commodities, this is when you want to buy, when things are closer to a bottom rather than a top. So people should keep that in mind.
Sean, thanks a lot for chatting with us.
Always a pleasure. Thanks for having me on.
My guest has been Sean Brodrick, Natural Resource Specialist at the Oxford Club. His website, investmentu.com. You're listening to HowStreet.com Radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.